Welcome back. This is Judith Peckett, and this video is about the income statement. Companies prepare 4 financial statements in order, and the income statement is always first, then retained earnings, then the balance sheet, and then the cash flow statement. Now, you are not responsible to know how to prepare the cash flow statement in Accounting 201, but we will present it to you for reference. Before we start creating financial statements, the first question you should ask yourself when you are reviewing a financial statement is, what type of business is this? We are going to work with service businesses. Now, what does that mean? I'm going to give you a couple examples. It could be computer repair, house cleaning, pedicures, manicures, massage, but in my example, it means an outdoor guide service. Customers are purchasing service, an experience. They are not buying a physical product. In this first picture, they purchased a guided hike. In the second picture, they purchased a whitewater rafting trip, guided, of course. So let's look at Outdoors, the name of my company, Outdoors Company, income statement for the month ended July 31st, 2018. This is the format for what we call a single-step income statement. Revenue minus expenses equals net income. In this example, revenue is $36,000 for the month ended July 31st. So I want you to think about that. $36,000 in guided trips, rafting or hiking. Expenses associated with this are $29,400. Now I want you to note that salary expense is the highest expense for this company, and that is typical for a service business, that your major expense would be people. And of course they have other expenses as well. Note that net income is $6,600. Another word for net income is profit. They mean the same thing, but we don't tend to see that in textbooks, although people use that term a lot in practice. The income statement shows revenue and expenses for a specific period in time, in this case the month of July. And the income statement tells us and gives us an idea of what the company can sell or create in the future. So if they earned $6,600 in July 2018, chances are next July they should be able to do the same thing or higher. So what is revenue in more detail? The amount earned from sales or service during a specific time period. What are expenses? The costs incurred to generate those revenues. So during that same time period, employee salaries and wages were about $16,800. As we said, there are other expenses, insurance, supplies, and remember, costs and expenses mean the same thing. Net income and profit mean the same thing. What is the bottom line? If revenues are greater than expenses in the current period, we call it net income. We also say the company is operating in the black, and that is good. What happens when expenses are higher than revenues in the current period? Then it's called net loss, also called in the red. In the old days of accounting, a loss on an income statement was recorded with red ink to highlight it. Here are some common income statement accounts. Expenses, salary, advertising, utility, rent, supplies, travel, and more. And note that they have that second word expense there. Don't just write salaries expense. Revenue, service revenue is what we're going to be working with for the first part of Accounting 201. So it's always going to be some sort of purchase, service, or experience. Sales revenue would be if you sell an actual product, like Nordstrom selling a sweater. Your homework will use language like consulting fees earned and commissions earned. Those are also revenue accounts, and they are a type of service revenue. But the two basic accounts are service and sales. Please note that dividends are not expenses, and we're going to talk about dividends in a little bit. All right, let's take another look at the outdoors income statement. Revenue at the top, then a list of all the expenses and total expenses, and then the calculation of net income. Let's practice. How is net income calculated? Pause the video if you need to think about this. And the answer is revenue minus expenses. Let's do some more practice, and I am going to ask you to hit pause and try this on a piece of scratch paper. This is a new company, Acct Company Computer Repair, has the following balances in its account on December 31st, 2018, which are for the whole calendar year. Prepare an income statement in the proper format. You can slip back and look at the previous slide, but remember the income statement only has on it revenues and expenses and the proper titles here: name of the company, income statement, and the time period. So take a minute and work on that, and here is the solution. Acct Company income statement for the year ending 12/31/2018, revenues, expenses, and net income. This ends part 3, the income statement.